it is always a concept. So make sure you know the cost function, the simple linear regression equation, which is the y equal to a plus bx. That is the simple linear regression equation. So if I can maybe borrow from what we did last time, following on that linear regression equation, which is just basically y equal to a plus bx. And like I also mentioned to you last time, that you need just to know the variables. Is someone speaking? I've heard some voice. Is someone saying something? Is someone saying something? All right. So I think maybe. Okay. So I was mentioning that what we said last time, do not worry about a lot of questions that you might have not seen. Do not worry about that. I normally insist on the concept. Once you have the concept at your fingertips, no matter the question, you'll always be good. So we were talking about the linear regression equation, which we tackled last time, and you just basically know the variables that you're dealing with. Which one represent dependent variables and which one are independent variables, and where you are given more than one independent variable, where now you have, I wrote that equation here, the cost equation where we have more than one independent variable, where we have y equal to a plus bx1 plus cx2. So those are two independent variables. So where you have those two independent variables and you're required to run a regression equation, yeah? You're needed to run the regression analysis. You need to know when you have your output like we did last time, you will get the independent variables output here, where you have the x1 and the x2. Then the y-intercept, which is denoted by A, will always remain constant there. So once you understand what you are looking at, once you understand this output window, you know where you pinpoint your R squared, your home and dry. And also, you know how to play around with the confidence levels. Like I mentioned to you, and you've already known, the confidence level by default is normally 95%, both lower and upper. So that normally represents the worst case and best case scenarios. So once you know how to play around with that, and whenever you are running the regression analysis, when you include the title, like in our case, we renamed the date to be X1, we renamed this to be X2, that is to represent the other variable. Then we also renamed, I think this was price, to be Y. Once you are running your regression analysis and you include the title, make sure there is that window where you mark that you also include labels on that pop-up window before you run the regression analysis. That is important because you are telling Excel that in my range of the data that you need to analyze and give me an output, there is a title included, right? So that it will be able to give you the correct output. And that's why in your output, you have this named, you have the analysis, you have X1 given there, the X2, the variables, and also you have the intercept. That is important when you're running it. So when you play around with the cost function, another thing, make sure you know how to interpret the results. It's not about running the regression analysis. You'll have it, yes. It will be here. You'll have everything, regression analysis from ANOVA and all that. Once you have them, are you able to interpret? Do you understand what those output mean? The AY intercept, the independent variable one, and the next one, and the confidence levels. You know what they mean. That is one important thing, so that the examiner also is able, because normally they will never bring you a regression analysis question without asking for the interpretation. Remember that. So when I shared this working last time, I made sure that I wrote those interpretation part so that you be able to align yourself and know how to give those interpretations. So remember that and always have it at your fingertips in case you meet such a question in an exam. Now, guys, tell me, I know you also did some of those past paper questions in class. I don't know if you did something to do with December 2023, question number 23. Confirm to me if you've already covered that so that we can do something else. Even though I can see the same concept that we already did is what is repeated in December 2023. So we may decide to skip it because I'm not seeing something that should be able to challenge you. Did you do this one? Did you try it out even on your own, leave alone the session you had with the other teacher? Did you already have a glimpse on this? December 2023, question number 23, confirm to me. Confirm to me, guys. Confirm to me, guys. Confirm to me, guys. Great. Juma is saying you looked at it, which is very good, So you'll realize that even for those who've not checked on it, like Betty, you realize that it is the same analysis you're doing because what you are required to do is just to identify the variables. And let me see somebody else. Daniel also did it. So if you look at the variables given there, they're very simple. And you're just asked to generate regression output from MS Excel. And, whenever you are asked to generate regression output, and again, you see you have regression statistics, ANOVA, and the intercept, intercept and the slope. So this one just tells you see part A, the whole of part A. Once you run that regression analysis, you'll always have your output and you'll score all these marks. That is so easy. So regression is always the easiest. In fact, when they made MA compulsory, this regression analysis was one of the easiest compulsories that they've brought on board. So you should be able to score full marks in management accounting in case they bring regression or BEP analysis. So part B was about playing around with the confidence level. And for those who've not attempted it, go through it and make sure you can see they're asking you to include the confidence level at 95. So even if you do not change it, but the default output will always have 95% upper and lower confidence levels. So that is also so easy. I mean, that one, there is nothing that should challenge anyone. Then now using a chart to represent the information which is in B above, where you are having quantity, actual cost, and predicted cost. So you just need to know, what are we doing? What is regression? Regression is about cost estimation. When you estimate your costs by running that regression analysis and you have your output where you have your intercept and the variables given there, you are able to come up with your new cost function. And the cost function follows the linear regression equation, y equal to a plus bx. So in your output, like the same case we did last time, you have the a, then you have the variables x1 and x2, and the slope you also have. So you can be able to come up with a linear regression equation like we did here. You can see the equation is there. So from here, this one now gives you the estimated cost. So you just need to make sure you follow what the examiner wants so that you come up with this data of quantity on the left side. Then you have just a table, then you have actual cost. Actual cost is what you are given in the question. You see this production cost, those are the actual figures. Quantity is also you are given. Then you come up with a predicted cost. So predicted cost is now what you get from the output. You see, if you run a regression analysis of this, the output that you'll get will appear like this, though figures will be different because of the data that you're running on. Then when you come up with the predicted costs, predicted costs, now you predict a cost based on the base figures under the coefficient column. Then you also do the same for the lower 95 and upper 95 confidence levels. You come up with different cost estimations using the same function. And when you do that, you'll be able to run this graph, which the examiner wants you to do in part C, and you score the 20 marks. You see how easy it is to score 20 marks? now you have no reason to fail this BDA paper coming in. Is it 2.5 weeks time? You all pass that. So let's look at something else. That is done. So now let us look at something else. Among the BDA questions, or maybe what has been covered before, I think there should also be a BDA question, which is interesting, that we have in the file I shared with you guys. Kindly check on August 2024. There was this mock paper file. I think there was some MA papers there, questions there. We already did FM. We already did FM part. So if you look at that, I hope I'm sharing my screen. I hope you're seeing it. And the question that we have there is an interesting one, which is also very easy. So you need to be able to go through it with a lot of ease, So if you look at the question that we have there, that is the mock paper. That is the mock paper, which everyone should have. I hope you've opened it on your end. So if you look at what we have there, the second question here, where you are told about you work as a management accountant, this, I believe, resembles something which we already did, this one here, where you are told to plot a line graph for price against time. And then this one we did. So this is what we did about the April 2024, if I'm not wrong. April 2024, 2023, question number 22. It was the same question which we did. So you should be able to test yourself and try rerun it on your own to confirm if you still remember the concepts. So I'm looking at something which is a bit different from just running regression analysis, because we already believe we are already good at that. So let's look at what this first question has. I'm seeing some chat here. Let me see what someone is saying. Somebody is called 81295309349. Interesting there. So I don't even know how to pronounce that in terms of name, but then someone help the good member there to have the question. Okay. So if I look at what we have here, the first question in that compilation file, we are told that the following summary of the receipts and payments was extracted from the records of the ministry. Even before I continue reading, have you tackled this question, guys, members? Even at a personal level, have you tackled this one? Have you tried to look at it? Somebody confirm to me if maybe, because there is no need of repeating something that you're already comfortable with, yet we have a lot of other things we can look at. If you look at the question we are having here, we are told about, you are given some data for the fiscal year ended 31st of March, 2024. And what I can see here, we have the details of receipts and payments. Then we have the actual figures. We have the original budget and we have the final budget. So that is as simple as that. Then the required comes there. They're asking you, required, the statement of comparison of budget and actual amounts for the fiscal year ended 30th of June, 2013. And that is must be in accordance with the IPSAS 24. Then presentation of budget information in financial statements. That's what IPSAS 24 postulates. Then part B, you are asked to provide a graph to represent the data so that it can make your presentation easy when you're meeting this good CS of this ministry. Which ministry is that? Of finance. So guys, if you look at what we have here, does it sound complicated? Is it something you're comfortable with? So that we look at something else. You know, we've already covered a lot. So it's only prudent to look at things that maybe might be of trouble to us. Confirm to me if that question sounds something that should not be giving you any headache. Talk to me, members. Talk to me. Is it something that Amos is saying we just do it. Catherine also. Matthew. Okay.
Morning, sir.
Morning to you.
I think we can do it because we are doing revision. So I think it's paramount enough we tackle it since we are on the last days
Okay.
of our sessions.
Okay. Thank you. Thank you. So that's okay. We go ahead and look at it so that we see how to go about it. So I've just read the question there. We have the data of actual amounts. We have the original budget. Then we have the final budget with the receipts and payments data. So if you look at what we have here, we are talking about budgeting. And I believe you are also aware, you've covered cash budget and flexible budgets so that you know how to get the flexing ratio and things like that. So now, if we look at this, and the required is asking you to prepare a statement of comparison of budget and actual, so that you'll be able to present. So a presentation comparison report. So how do you go about this simple question that we have? Now, it is very simple. It is very, very simple. So here we have the actual budget, we have the original budget and the final budget. So for us to do a comparison, for us to come up with a comparison, we are simply going to compare what we have under the actual and the final, so that we come up with what we call a variance. We want to see what is the variance between the actual budget that we have and the final budget and the actual budget. Because you can see we have original budget, but when coming up with the variance, we only look at the actual and the final budget so that we get to see what is the variance that we can be able to maybe pick from this data that we have. So that is the first step I would want us to do. And I don't want to copy this data and do it afresh aside. I just want to use the same question that we have so that we come up with a variance. And to make my work easy, I will just come up here and talk about variance. And like I've mentioned, it is very easy. So the level of precision remains the same. We are talking about millions, billions. We're talking about billions. And I've told you we're just comparing actual and final. So how do you compare? Which one are you deducting from which one? Which one are you deducting from which one? We are comparing the final against the actual. So we are looking at the difference between the final from the actual against the actual. So meaning our reference point should be the actual. That's where we are starting from. It is the actual, then we compare it with what we have at the end of the day so that we see this 320 for the first one, the first receipt of taxation. Now, the most important thing is interpretation. How do you interpret? When you talk about budget, we have two levels of interpretations that you should have. A budget can either be favorable or adverse. Those are the two, it can either be favorable or adverse. What do we mean by favorable and what do we mean by adverse? Those are very simple terms in the direct, but it is prudent that somebody might be struggling. What do we mean when we say a budget is favorable? Somebody very fast. When you say that budget is favorable, when you compare actual and final, what does that mean? Somebody.
I think it is when it has a positive variance.
A positive variance. And when does a positive variance arise?
When it is within the budgeted amount.
When it is within the budgeted amount. All right. All right. Somebody else with a different perspective. Go ahead.
When we have a savings from the original budget.
When we have a savings from the original budget. I like that language they're using. That's very good. When we have a saving, then it is favorable. Good. Is someone having a different interpretation of that? I'm looking at the charts here and I'm seeing Ruth is saying within the budget. Good. Esther is saying When actual is greater than final, that's okay, right? Ruth is also giving another one saying within estimated budget, which is okay, good. So I hope I believe we are on the same page in that. And now, that one we say it is favorable. So the inverse, the opposite is also true, and that's where we say the budget is adverse. The budget is adverse. So we have a positive and a negative. Our first variance is a negative. So when our variance is a negative, is it a favorable or an adverse?
That's an adverse.
Okay, I can hear there is an echo there. That's okay, but okay. So when we have a negative variance, and remember, before you talk about negative, you must make sure you are comparing final against the actual. But if you do the reverse, where you are comparing the actual against the final, you will not have a negative. And that's why you have to make sure you are comparing final against the actual. So that if you start with the actual, you compare with the final. So that whatever you get, if it's negative, then you say that is an adverse variance in that case. Good. So now that I've set this formula of comparing between actual and final, why don't I just autofill so that I have everything auto-populated to the end like that? And I'm having my variances outlined to the end. So with the variances I have, we can now give them the interpretation. So favorable, we are going to use F, capital F, and then adverse, we just use A to represent that. So the first one is a negative. You can go ahead and use the if functionality. I believe that now that we've covered a lot of concepts to do with advanced Excel, someone can easily go about to use the if functionality so that if the output is negative, give it, an adverse connotation. And then if the output is positive, give it a favorable connotation. So you can go ahead and do that. But for now, I will just go ahead and type them in. So positives are all favorable, negative is adverse. Positives are all favorable, negative is adverse. Where the actual amount and the final amount are the same, like in this case of education here, you do not have any variance. So in that case, you cannot say it is adverse or favorable. This one, you just, this is an optimal point. It is at equilibrium. So you do not have to give any connotation there. So you just say adverse for this and then favorable. Now, once you've already gotten your variance, you come up and do a summary. Let me just introduce a row there, a row or two like that. So you come up here and do a summary of the totals. So I want us to do,
Excuse me,
yes?
On the payments part, we
Yes.
talk of the others here. You're saying that 40 is favorable. We had budgeted for 700 to make payments for 760 billion, but we ended up paying 800 billion. Should that be an adverse variance?
Good. Thank you for that reminder. There is something I've overlooked here. So guys,
Should
when
be
you
the
talk
opposite.
about receipts and payments, we need to treat them separate. Somebody mute back, please. There is an echo. I think it's the member who has just spoken. Please mute. Thank you.
No, me, I'm muted, sir.
Okay. So let me hope it's okay. So now, our interpretation depend on the type of transaction we are looking at. Our first interpretation of comparing the final against the actual now applies on the receipts part, where we are giving the connotation of adverse and favorable. Now, when we come to the payments, remember that the first part you are receiving. Yeah, you are receiving. But in this other payments part, now we should be doing the reverse. So that we get to see the interpretation of a payment. If the actual payment, for example, on defense was 800, but then in the final budget, it was 720. It was 720. So final budget, you budgeted for 720, but actually you paid 800, right? So if the actual is greater than the final, if the actual is greater than the final, now you realize that you are paying more. You are paying more than what was in the budget. So actually the variance should be a negative variance because you are paying more than what you budgeted in your final budget, what you had in your final budget. The actual is higher. So in this case, you need to be having a negative variance. So that means we are starting to compare using the reverse. So we are saying you compare the final against the actual. And there you can see we are having now a variance of negative. And if I run it to the end like that, you'll see now the signs will change. The positives and the negatives will change. Now, let's look at how do we interpret it? How do we interpret it? And the interpretation is very simple. Very simple. Now we say, if you pay more than what you budgeted, it will be an adverse. So that's why it is coming to be negative 80. So this connotation of adverse is correct. Where the actual and the budgeted amount are the same or are equal, there is no either adverse or favorable. That is an optimal level. So we leave the zeros without any connotation. Let's come to housing. In housing, you budgeted 360, but you ended up spending only 320, meaning you saved some amount, which is about 40 billion. So when you save 40 billion, that is a favorable variance. So we give it a connotation of favorable. That is a favorable variance like that. And then we look at others. In others, you budgeted to spend, in your final budget, you had 760 billion, but then you ended up spending 800 billion. So you overspent, you surpassed your final budget by 40 billion. So that's why under variance, it will come as a negative of 40 billion. You overspent. So that one connotation is adverse, not favorable. It is adverse because now the sign changed at that point. So I hope we are together up to that point on the interpretation. Are we all good on the interpretation? Confirm to me if we are all good. Are we okay with the interpretation, guys?
Yes, we're okay.
Good. Thank you. So, the next thing after coming up with the variance and the interpretation, let us go and get the totals so that we get to see what surplus or what deficit do we have as the net effect of the variances that we are able to come up with. Now, when doing that, I want us to treat the payments. Yes.
So on the receipts part, where we have taxation, is it that we are paying the taxation or we are receiving something?
So remember, we are in the Ministry of Finance. This is not a business.
Okay,
This is a ministry within the government.
I understand.
Good. So now we continue. Now, when we want to do the overall comparison, let us come up with the total payments, and we compare it with the total payments. Let's start with the total payments. Let us start with the total payments. And the total payments are the total amounts that we paid, and I want us to have it there. So let me add all the payments like that. And my total payments come to 3520. That is for the actual budget. The first column is actual budget. So that is our total payments. Then I want us to do the same for this other middle one is the original. Let's compare it. Let's also get the total of the original budget for the payments. And let me just drag this formula here to add that. Let me confirm. I think it's okay. So that is the total payments for the original budget. Yeah. Then we do the same for the final budget. We are comparing just the payments alone first. the payments. So let's come here and also do the same for the payment side on the original budget, on the final budget. So we've just added all the payments for the actual budget, for the original, and then for the final. So actual spent, then actual payments, a total of them, then original budget, total payments, then in the final budget, total payments. We've just added those ones. We've not touched on the receipts part. We've not touched on the receipts part. Now, I want us to ask ourselves, now, when we compare, let's also just get the total receipts. But before we do that, I'm just creating some column here so that we compare. I'm just interfering with the question, but I hope we all understand. So let me just put it there. I just want to introduce some double line there like that so that we get the totals. So let me also add the totals of receipts for all of them like that for the actual, original, and final. So I have the totals of the receipts and also the totals of the payments. Now I want us to come up with either we are running on a deficit or we are running on a surplus, a deficit or a surplus. Now, when does a surplus arise and when does a deficit arise? When you're looking at a receipt and a payments, receipts and payments. Somebody to remind us. This is just a reminder because I presume we already know. When does a deficit arise and when does a surplus arise? Somebody remind us. When comparing receipts and payments, when do you talk of a deficit and a surplus? Yes.
I think a deficit arises where the payments are more than the receipts.
A deficit arises when payments are more than receipts. I think that is a very simple and direct interpretation. Thank you there. Thank you there. Thank you, member there. I didn't get the name. I'm normally not very good at capturing names, so you'll forgive me. So that is correct. When you talk about a budget deficit, then it simply means your payments are more than your receipts. And then when you talk about a budget surplus is where what you've received is more than what you spent. So that one, you're talking about a surplus. So let us get either deficit or a surplus for all the three categories of the actual spend, the original budget, and the final budget. Let's get to see, do we have a deficit or a surplus for each? So how do we do that? When we are doing that comparison, we are comparing the receipts. We are starting with what you receive against what you're spending, because in actual reasoning, you should not spend what you don't have. When you talk about budget, you should not spend what you don't have. Otherwise, if you are purporting to spend what you don't have, where are you getting the other extra resource to spend? Then you must be running on a deficit. And when you're running on a deficit in financial terms, then it means you have sourced for other financing to finance your expenditure, which is now a wrong perspective. And now you are beating the essence of doing the budget in the first place. So let's see. Yeah, the budget's aligning. We are comparing the total receipts against the total payments so that we see if we are running on a deficit or a surplus. So the first one, I'm getting negative 120, and we can see that our payments are more than what we received. So actually, this is a deficit. That's why it's coming as a negative. So that's why when we talk about deficit or surplus, so deficit will come as a negative, then surplus obviously will be now the positive. So I'm just putting up those signs there for somebody to correctly interpret. So when you get a negative, that is a deficit. When you get a positive, that is a surplus. So I will do that to the end. And now we have the figures there like that. Good. You should not deviate from what we are looking at. Remember, the required part is telling us to prepare a statement of comparison of budget and actual amounts for the fiscal year ended 30th of June, 2013. Budget and actual amount, right? So we've done the comparison of actual and final to come up with the variance. We are now doing the total summary of looking at either we are running on a deficit or a surplus. And now we are looking at the actual on its own, the original on its own, and then the final on its own, the final on its own. So how do we come up with a summary for presentation purposes? A summary for presentation purposes. And when you talk about presentation purposes, remember, the required part is telling you that you are doing this presentation. You are doing a presentation. And as you do a presentation, you need to understand your audience. These people, they might not be able to interpret all that you are having at this point in time. They might not be able to understand. Yes, it is true that our main focus will be on the actual. Remember, actual is what has already been done. Actual is what has already been done. This is the confirmation of what has been done. And as we have already given here, for someone in your presentation, in the committee where you're presenting your audience, for someone who understands that our focus is on actual, will already pinpoint and tell you that actually we've run on a deficit of 120. That person will be comfortable because they shall have already understood. But what of those people who do not have that knowledge of interpreting your output here? Remember, this is part of your presentation. This is part of your report. But is it enough to leave it at this point? Someone who does not know where to focus on will not understand that my focus should be on this 120, which is our actual deficit. So to make that person understand, it is good upon you to go ahead and give that summary. And the summary we are giving here for presentation, we are calling it reconciliation. We go ahead and do what we call a reconciliation statement, so that you put everything together for your audience to understand it best. And when we are doing reconciliation, we just bring the level of precision. And the level of precision, our figures are in billions like that. And I want us just to come up with, we're just doing 2 columns. And I don't have to, in fact, I don't have to draw any table there. Let me just go ahead first. So what are we comparing? Now, I want us to start from the final figures we have. Remember, in our final budget, we realized there is a surplus of 400. There is a surplus of 400. So we want to compare the surplus of 400 against the variances. Remember, we have a surplus on the final budget of 400 billion. And then the first thing we did was to get us a variance. How did we get the variance? Remember, we were comparing the final budget against the actual. Final against the actual. Yes, we already know that in our actual budget, we have a deficit of 120. But what we want to do is to do a presentation to make somebody really understand what we mean by the variances and how we will arrive at the final 120 billion, which is a deficit, so that they understand how it comes about, right? So we are doing reconciliation. We're just reconciling everything we already have. Guys, you see what we've done here? We have everything. The only thing now we're just doing is to put into perspective for easy understanding. We have everything already. We've answered the question, but we are doing a presentation. So remember, when doing a presentation, you are not presenting for yourself. Your intention is to make your audience understand what you're doing. As a professional, you understand. If you have another professional in that panel or in your audience, they will understand. But not everyone is a professional. Not everyone will interpret it the way you understand it. So you have to synthesize it and make it easy for them to understand. How do you do that? That's why we are coming up with the reconciliation. That's why the reconciliation part is important. So what are we reconciling? Let's see. In our final budget, we are starting with the surplus that we realized in our final budget, because that is what brought us the variance. We are comparing final against actual. So surplus, we start with the surplus. What surplus did we have? Our surplus in the final budget was 400. So that is where we are reconciling from. Now, this 400, we are reconciling it against the variances. And if you look at our figures here under the receipts, the first variance was on taxation of 320 billion, and it was an adverse variance. It was an adverse variance. So we bring it here and talk about taxation, and we bring that variance of 320 adverse. because on that line, we overspent. On that line, we overspent. So in our final budget, the figure was 1120, but then we only received 800. We expected 1120, but we received only 800. So that's why we are running on adverse variance. So you bring that adverse variance here of negative 320. So in fact, I just want to refer to it. I don't want to type like that. We bring the 320. We're just reconciling. Then the next item, we expected to receive 480 billion in borrowings. But what did we receive? 400. That's why we came up with a variance of 80 billion. So we lost the opportunity to receive 80 billion. So let us reconcile it against the final budget surplus of 400, which we already got. We are just reconciling. So we come here and talk about borrowings. We bring the borrowings. What is the amount of borrowings? It is here. The variance was this 80. So I bring it like that. We're just reconciling everything we already have. I do the same for the next item. We expected to receive 840 billion under trade activities, but what did we receive? We received 800. So that's why we ran on to a variance of 40 billion, which is an adverse. We lost that money. So we come there and talk about trading activities like that. And then we bring its variance. With the variance on trading activities, we lost opportunity to receive 40 billion. So we bring that 40 billion there. Then what happened on aid from international agencies? We expected to receive 360 billion, but we surpassed. We received more. By how much? By 40 billion. We received 400. So it means we had a favorable variance there. So we bring it also because it is one of the outputs that led to our initial surplus we are reconciling here. So under aid from international agencies, we got a favorable variance of 40 billion. We bring it there. Then on disposal of assets, we expected to receive 760 billion. But how much did we get in actual sense? We only got 800 billion, which is more than what we expected. So that's why our variance is also positive by 40. So we call it favorable variance. So we also bring disposal of assets. We realized more by 40 billion. That's why we called it favorable, the connotation we gave it. We do the same on other receipts. We expected to receive other receipts of 280 billion, but we only got 200. So means we lost opportunity to receive 80 billion. That's why we have it as an adverse. So we also bring it there like that. Now, that is on receipts. Let us reconcile also on the payments part. On the payments part, we do the same. We still compare those two because we already have the outputs here. We already did the variances, so there is nothing difficult there. So on the payments, we also bring the first element of payment, which was on defense. On defense, we budgeted to pay 720. But how much did we pay? We ended up spending 800. So meaning we surpassed our budget by 80 billion. So we paid more. So that variance is adverse. We bring it here. Then on this other element of education, what we budgeted is what we spent. So there is no variance. On health, what we budgeted is what we spent. So there is no variance. So I don't have to reconcile zeros. So that one has no effect. I come to housing. We budgeted 360, but we only spent 320. So we must have saved some good 40 billion. So I will just bring on board these two, education and health, even though we are not reconciling them, but we are now reconciling the other two, which is housing and other. So in housing, we have a favorable 40. So I will just go ahead and bring the 40 that we saved on that part. We do again with the others. What are other payments we did? We expected to pay other elements 760, but we ended up paying 800. So we lost an opportunity to retain 40 billion. So that is a figure we bring there. So after doing all this information, remember we are only reconciling. There is no computation we are doing. We already did the computations. We're just reconciling what we already have. So once we do this, we just get the total net effect. The total net effect. And we expect the total net effect to be equal to the either deficit or surplus under the actual. Like I told you when we started the reconciliation, our focus for someone who understands is the actual, because this one has already been spent. If it is receipts, these are monies we've already received. So there is nothing we can do about it. This is already gone. We've already confirmed that this is what we have. On payments, this money is already spent. There is nothing you can do about it. So this actual column is our main focus. And you realized when we did this analysis overall, we got already a deficit of 120. So this is what we expect because we're just reconciling. So let's confirm if we're going to arrive at the same by getting the total net effect. And the total net effect runs from all the way from up to down. And I can see our net effect is 120. And this is what we call a reconciliation report. So this reconciliation will make someone who do not understand this one here to get a correct interpretation of the surplus we have under the final budget, and then you do all the adjustments with the variances we have for each item. Then we have that. Are we together, guys? Are we together? Are we together? I want us to do now the graph. Are we together? Are we together? Silence means everyone is good. Everyone is good. And I can see Matthew has also reiterated on an easier way to get it. Surplus equal to receipts greater than payments. Yes.
Maybe can you put your cursor somewhere to where how you've arrived at the 120? Sorry, I think I missed that.
Mosoti.
Yes.
Which
The
120? Which one?
The one that we have
Reconciliation?
calculated under reconciliation, yes.
Reconciliation is just the net effect of all those variances.
Oh, okay.
Yes, the net effect.
And Mwalimu, if I may ask,
Yes.
is that our original budget there just to confuse us because we have not used it?
So, it is not to confuse you. You know why? I want you to look at the second required part.
Okay.
It's a good question. So it is not put there
This question,
in.
do we have what we call the supplementary budget, maybe?
Yes, supplementary budgets are always there, but then in this case where we are doing the presentation of variances, we do not have supplementary here. In real life, even for those of you who are working, you know there is supplementary budget, and we've also heard about it in our national government where they normally revise the budgets that were already put in place by bringing on board a supplementary budget after they realize there is a deficit. Now, if you look at the variances that we already have here, you realize that if you under budgeted on a line, I want us to look at the payment side. This is an interpretation in practical sense. So if you look at the payments here and you realize that your final budget, or let me talk about original budget first. If you realize that your original budget, the initial budget that you had was, for example, under education, you had 1,120,000. I want you to to compare this. So originally they had budgeted 1120, but what happened so that they come up with the final budget? Yeah, they came up with a supplementary budget and they flexed that budget to come up with the final budget. Now that you've done flexible budgets and cash budgets, you should be able to understand it even better. Yeah, so you realize that the original was 1120, but in the final budget, it came to 1200. So that's where the concept of supplementary budget comes in, so that they come up with the final budget because they realized they under budgeted on the line of education. That's why they adjusted it to 1200. And you can see it is after the adjustment, they realized they spent the exact amount they spent the whole 1.2 billion. They spent the whole amount. So that is the idea about it. So it's the same thing, different terms, but the same concept. Good.
Okay.
Let us now.
Excuse me, sir.
The next part, yes.
I just want to tell Musoti to turn off his video.
Somebody wants us to see him. Musoti?
Sorry.
All right. Thank you. Now let's look at this part B, where we are told, provide a graph to represent this data for proper presentation during the meeting by the CS of this ministry. Now, we have analyzed the results of this ministry, budgets against the performance actual, and now we have the data. Now, to make the presentation, because we know pictorials and dashboard presentation plays a critical role in understanding, it enhances understanding of our reports as accountants in this meeting. It does not stop at the figures that you normally produce in your statements. We've done the reconciliation here, it's okay. But then we need to make it more understandable by our audience. And one way is to involve pictorials. And in accounting terms, the pictorials that we normally employ are now presentation by use of dashboards. That's why dashboards is normally a very, very critical part when doing presentations. So let's go ahead and now present this graph. And we are presenting the data that we already have. We're presenting the data that we already have. And we are plotting the graph. Remember, the examiner has not specified. The examiner has not specified what you're presenting in your graph. What you're presenting has not been specified. But we've already given a reconciliation. Our main aim is to make our audience understand what we've already done up here. And we have this data of actual, original budget, and final budget. So now, I know someone is asking now, what are we presenting in this graph, in this chart? Remember, all these variances we've come up with, all the summary to get either deficit or surplus we've come up with here, which finally we've reconciled and confirmed that actually we've run on a deficit of 120 billion. All this emanated from the original data that we were given. So what the examiner is asking you is very easy. In fact, no computation. You don't have to think hard. Just pick what the examiner has already given you here so that you come up with a chart. And when you're coming up with a chart, remember, before you insert a chart, you have to highlight your data. I hope we all know that. And for you to easily highlight your data so that you present it in a chart so easily, you have to make sure you do away with any spacings in between your rows or in between your columns. And in this case, we are going to present a chart to show the actual expenditure and receipts, to show the original budget on receipts and payments, also to show the final budgets, receipts, and the payments that were expected from the final budget. Now, it is from that data that we got the variances, which actually we have reconciled, and it is a part of our reports. We are just adding a spice. We're just spicing up our report. We already have everything we need, but we are making it more presentable. We are adding it to someone, for someone who wants to see that picture in a nice way, attractive way to enhance their understanding. So now, for us to draw that chart, let us bring on board this information which the examiner gave us, but put it in a manner that we can present it in a chart. The way it is, if you go ahead to highlight this data and insert a chart, you'll get a very, very crooked chart. Why? You have spaces, you have different titles which Excel might not understand. And because when you're inserting a chart, a graph, you need to have the variables clearly defined. And Excel will pick this as a variable. For example, details. It will pick details as a variable. It will pick actual and shillings in billion as a variable. It will pick original budget of this amount as a variable. So we have to put it in a manner that Excel understands so that we insert a chart that will correctly depict what we want to present. Did someone want to say something? I heard some voice. I heard some voice. Go ahead. I heard some voice. Are you there? All right, maybe that was a mistake. So we go ahead. So how do we put it in order? I want us to do it this way. I just want to copy all this data that we already have like that. And I'm copying it because when inserting the graph, we have to highlight the data. So here I'm copying it because there should be no formulas there. I just want to copy it like that. I don't want to paste it as values. I don't expect it to have any formulas with it. So once I do that, the next thing I want to do is to do away with these other extra columns, other extra rows, which we don't need. In our graph, in our chart, we do not actually need all these titles that we have. We do not need them. We do not need the labeling of receipts and payments. Then details is here, but I only need one row. You can see here there are two. So that means I need to do away with the level of precisions here. I'm doing away with them. So I have my details. And then because this one is an empty row, I want to do away with it. And to do away with it, I just want to push my data there, and I confirm by saying, okay. I do the same to do away with all these blank rows like that. And now my data looks better now. It looks a bit organized. So from this point, without any blanks, when I highlight and insert, it should be able to pick the correct thing. So this is final budget, original budget, actual, and then the details. So let me put this in bold like that. Good. So our data is in order. So we can go ahead and now insert a chart. Insert a chart as required by Part B. How do we do that? Very easy. This is just dashboarding, which you've already done. And now we just go ahead and highlight the whole data. Then we go to insert up there. What are we inserting? Now, before you choose which type of chart to put here, you are looking at the data you're presenting. Most of them are in values. You can see the actual data, those are values, figures in amounts. We have original budget, those are values. Then we have final budget also, those are values. So when presenting values, you should be able to know which type of chart best presents values. We know which one are best for trends. We know which one are best to present proportions. We know which ones are best to present distribution. And in this case, because we have amounts, that is the data we are presenting, because you also have, so let's see, Excel normally gives you the suggestions under the recommended charts. So the first suggestion is clustered bar chart, and you can see the alignment of a clustered bar chart with a description. They tell you a clustered bar chart is used to compare values across a few categories. Use it when the chart shows duration or when the category text is long. Do we have duration in our data? I think no, we don't have duration. So this part you can see, it is best used when chart is showing duration or when the category text is too long, is long. How long is long? That is relative, but then we do not have duration and it does not look very good to me to present the data that we have. So I will go for another alignment. We can see the second one. You can see that is a stacked bar also showing. And like we mentioned before, when doing dashboarding in when you are doing Excel presentation of financial statements, you must not choose a specific type of chart. You as the analyst, as the professional, as the accountant doing your reports, remember it is you presenting. You've done the analysis on your side. You are presenting to an audience who do not have the expertise that you already have. You want to make them understand. So it is from your own judgment that you sit down and ask yourself, will my audience understand what I'm presenting if I choose this type of chart? That is a question you ask yourself and you answer it on your own. You need to understand they don't have the expertise. You need them to understand, because if they can't understand, they won't be able to make informed decision. Remember, financial reports and financial statements are used for decision making. That is the final bit. That is where they rest, decision making, and to give the overall picture of performance of either that ministry or that firm that you're working with, that you are presenting the report. So now, because it is your judgment, please pick what your judgment aligns with. If you feel that this stacked bar will best present your information to your audience, given the type of audience you have, please go ahead and pick it. So you can pick this stacked bar chart and you can even see the description there. Use it to show how segments of a whole change over time. Do we have segments of a whole? If your judgment says so, why not? But my judgment, it does not really present it the way I would want it to show. I will go to the next suggestion. The next suggestion is about clustered column and used to compare values across few categories from the description here. And when do you use it? When you use it when the order of categories is not important. Now, if you look at the data we are presenting, is the order of categories important? Remember, I removed the titles of payments and receipts. We just have items under details, taxation, borrowings, and all that. Actual, original, and final. We do not follow any order in this part. It is all about the elements, the items. So the order of categories is not important here. We are just looking at the comparison of values. So according to my own judgment, I will go with clustered column. I will pick it by confirming here saying, okay. And I will have my clustered column presentation there. I pull it down a bit here so that I can do some adjustments onto it. The first adjustment is to increase the size and to look at the alignment of the variables. Now, which variable is on the y-axis? It is the amounts, which I think is best for me. I wanted it to appear on the y-axis. Then on the x-axis, we are having the variables showing the elements from taxation all the way to others. Then you can see how nicely the clustered bar chart presents the amounts in comparison. For taxation, you can see the blue one is for the actual. Then I don't know if this is pink. Ladies here will correct me. The pink one, which is the middle one, is the original budget. You can see how it is compared here. And then the gray one, I'm also not sure of the colors, so you'll also forgive me. The gray one here it represents the final budget. So you can see it clearly presents the differences. So for someone who do not have a lot of expertise to overthink about this year reconciliation report up here, this person will just look at it and say, oh, okay, so our actual was actually less. And the final budget is way higher than the actual and also the original budget. So under taxation, someone will already see that our final budget was way higher than even the actual. So meaning, if that person goes ahead to look at our reconciliation or the variances here, that person will already see that, oh, under taxation, if you come to under taxation, you realize that, you know, our actual is less because taxation is what we expect to receive. So we received less than what our final budget had. So that's why there is an adverse of 320. So at least there is a pictorial presentation and interpretation becomes easy. When you look at borrowings, taxation, under each titles of either payment or a receipt, that interpretation at least will come home. But when doing dashboarding, remember to label your access. So we will go there and say access titles. On the y-axis, we are having the amounts. And it's also good to put the level of precision. Our figures are in billions like that. Then on the x-axis, we have the details. Let's just call them details. I was trying to look at any other better term to present this, but they're just details. That's what is in our original presentation there. Then we give it a title. What are we presenting here? What are we presenting? We just say, this is a graphical presentation. A graphical presentation. What are we presenting? Remember what we highlighted here. Actual, original budget, and final budget. So that's what we presented. So that forms the title of our graph. So we say graphical presentation of actual, original, in that order, actual, original, and final budget, and final budget. That is the order of our table here. So I'll just pick it directly like that to present, to be our graph title there. So once you've done that, you can go ahead to include aesthetics. If you feel that this one do not look very nice, you can go to chart design and change the design by even setting the color that you feel. If, for example, you are presenting to an organization with a set of colors in their logo, you can decide to have your dashboard to resemble their logo. So that's why Excel gives you even option of colors here. You can choose which color do you want your report to align with. If you want it to align with this, you'll choose that. I don't know which color is that, so somebody should not ask me which color is that. So I'm just selecting colors from what I can see. So you can be able to set any color Also the design, the type, you can also change to have that dark background as you play around with the colors. And the most important thing, you already have your presentation. It is just about choosing the color which you feel is best for the day or for the audience you're presenting for. So that answers part B of that question. Yes, go ahead.
It's inserting them.
Sorry?
Umeniacha nyuma kidogo. It's inserting them. Hello?
Don't understand your question. Do you already have the graph?
Yes, no, I don't have the graph. I have the information. So I just wanted to insert now the graph.
You have this information already, this one?
Yes, yes.
You just highlight the whole of it and then you go to insert.
Yes.
Under inserts, you just go to the chart. What we're inserting is a chart. You see the chart area, it has several charts. You can go to recommended charts or you go to all charts. There is this lower bottom right corner where you have that arrow so that you can have the window of charts. And then from there, you choose which chart, or you can just go ahead and click on recommended charts so that you choose which chart you are recommending or you'd want to use there.
Thank you. Thank you, sir.
Okay, you're welcome. So that answers part B of that question. And that's what the examiner wanted you to do in that part. Are we together, guys? Are we together? Are we together? Are we all on the same page? Are we all on the same page? Good, 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 good. So we are together there. Very nice. So now, Ruth is asking, how can I copy paste without interfering with the original data? So Ruth, if there are formulas in your data, just copy and paste as values so that you don't interfere with any interconnectivity between the cells. So you copy and you paste as values. You'll have your figures without interfering with the original data. So, and in our case, I don't think if there were formulas in the original data, so I just copied because it was not to interfere with it. Good. So guys,
excuse me, Mwalimu.
yes.
I'm just wondering, hapa kwa reconciliation statement, is there times kwa you can miss to have a surplus, you just have deficit, or through on the final budget and on the actual budget?
So, so where you can only have a deficit, when you talk about a deficit or a surplus, that is an overall comparison. We are comparing just receipts and payments. That's where deficit and surplus comes. Remember, at some point I asked you guys when does a deficit arise and when does a surplus arise? Remember, we are talking about budgets. When your receipts are more than your payments, actually, in that your budget, you have a surplus because you have received more than you have paid. But then when your payments are more than your receipts, it means you have spent more than you have received, right? So when you spend more than you received, then it means you are running on a deficit. So that's how we got the 120 as a deficit here, denoted by negative. If I activate my formula, you can see we are comparing the total of payments against the total of receipts against the total of payments, because the reason why we are starting with the receipts is because you should spend only what you have. You should not spend what you don't have in terms of budget. That's why a budget is there. A budget is there to guide you so that you know if you are working within your budgeted amount. Don't spend more than what you have. That's why we are comparing payments against receipts. We start with the receipts. That's how we got the deficit of 120. I don't know whether I've answered your question. Have I answered your question? The member was asking.
On the final budget, hapa kwa deficit and surplus, is there at any given point you can get a deficit also?
Now,
the 400 there.
Yes, you get a deficit. Like it is the same thing I've just mentioned here. You get a deficit when your payments are more than your receipts. And
so if you final, I wonder if you get a deficit, you do the reconciliation the same way we've done
Exactly. We're just reconciling this final bit. You see the 400? This final bit is what we are reconciling here. You see that it is the amount that we brought here. So if it is a deficit, that is where you start from, because you are simply interpreting the data that you already given. You don't have any responsibility here. You know, as the person accountant working on this analysis, you don't have a responsibility. So you should not be afraid of reconciling a deficit. That is what they gave you. That is their performance. So you are simply interpreting what is there so that you present that your report and analysis. So if it's a deficit, pick it there, bring it and reconcile. Because I told you on reconciliation statement, we are not doing any computations. We are simply transferring what we already have here. This is what we already have. We're just reconciling it by putting it together so that it conforms with either the deficit or the surplus that we already had. You get that?
Okay. Yes, thank you.
Good, good.
Mwalimu, I have a question.
Yes.
Actually, for me, I'm not understanding the reconciliation statement. Okay, as an accountant, I know how we arrived at the 120. And so if you're explaining it to a layman's or to a layman, where will you start? Because the surplus 400 on a final budget, the negative 120, is on the actual that was transacted.
Yes.
So how would you explain it to a layman? That, okay, at first we had a budget surplus of 400, but now we reconcile it with negative actual transaction of a deficit of 120.
When you are presenting to someone who has little knowledge, I don't want to call them layman. When you are presenting to somebody who do not have a lot of interpretative knowledge about this statement, you do not explain it using the reconciliation statement. Remember to understand the word reconciliation. When reconciling, for example, if you're working as an accountant at the moment in this meeting, you normally do bank reconciliation. Now, I want you to look at it from that perspective. Now, as you do your bank reconciliation, what is your objective? Your objective is not to overturn the credits and the debits in that bank statement. Your objective is not to prove that the bank was wrong in your debits and credits. Your objective is to compare and confirm. That the figures you have on your end about expenses in your system, the expenses you've recorded, are actually the amounts debited in your statement. You confirm that the amounts you received from your business operations are actually reflecting on the credit side of your bank statement. And you are confirming the accounts that you've settled, the accounts from which you have received on the credit side of that bank statement, and the accounts you have paid, which are reflecting on the debit side, if they are correct and the actual and also the amounts, right? So you are just confirming what you already have. I want you to look at it from that perspective. In that bank statement, the amounts reflecting on the debit side are already spent. There is nothing you can do about it. It's money out already. Money out. In fact, when doing reconciliation, you normally change the heading of the debit and the credit to be money out, money in, so that it becomes very easy to understand when reconciling. Now, because you can do very little about the credits and the debits, because it has already happened, you're just confirming their accuracy. You are confirming accuracy. That is the statement, confirming accuracy. Now, if you are presenting to someone with limited knowledge about this, you do not go to explain the reconciliation statement. No, this is just a confirmation because you are not computing anything here. Please come here to the original data. That's why when we were drawing the graph, we did not draw the graph using reconciliation. Why? Reconciliation is just a confirmation. We are not doing any fresh computations here. Our main focus is the original data here. So when explaining to somebody of that category, just tell this person that these are the amounts we expected to receive. In our original budget, under taxation, we thought we would receive 1 billion, 1,000. Let me just talk about 1,000, leave alone the level of precision up there. We thought we would receive 1,000 from our taxation. But on a better look, when we looked at this, we had adjusted our original budget to 1,120, to 1,120, to reflect the real expected amount we are going to receive from taxation. But then, when the actual receipt came in, when we now received the amount after the period, the budget period, we only were able to receive 800 billion. We only received 800. So what does that mean? Now, if we expected to receive a total of 1120 after adjusting our regional, we only received 800. That means we lost an opportunity to receive 320. We did not receive 320. That's why we call it adverse. It is a loss. That's why it is negative. That is you explaining to someone who do not have, who cannot understand it on first look. You tell this person they expect to receive 1120, but we only received 800. So we lost 320. We went a loss of 320. Again, on payments, you tell this person, we, in our expenses, in our projection of expenses, remember, a budget is a projection. We projected to spend 720 on defense, 720 billion on defense, even though in our very original thought, we thought we would spend 1,000. But then after careful look onto it, we realized we could spend 720. But when the actual period happened, up to now, we look at the previous period, we realized we spent 800. So if we thought we would spend 720, but we ended up spending 800, then it means we overspent by 80 billion. That is you explaining to someone having limited knowledge. Tell me, that person, will they not understand it when you bring it to that perspective?
Excuse me, Mwalimu.
Yes.
Can I bring it to like the way I want to express the way I'm trying to understand the whole thing in a layman, in God's language, about reconciliation.